When is the ideal time, in your opinion, to purchase Tesla stock? Even though Tesla stock has been below analysts' projections for some months, investors continue to buy large quantities of Tesla stock. Even in January, star investor Cathie Wood has been loading up on Tesla shares. It even looks as though she is on a dip buying spree, as her investment firm Mark Invest has been buying Tesla shares whenever the stock hits a record low. Cathie Wood, for one, believes that Tesla's stock price during the dip is a buying opportunity, while others have been scurrying to share their shares due to Tesla's stock's unsatisfactory performance in the market. Given that Tesla's stock has been declining following a difficult year, offering investors opportunity to purchase, more analysts are even beginning to agree with Wood's assessment. In a recent interview, Mark Newton, the head of technical strategy at Strat Global, stated that even though Tesla is trading at a level that might not be in line with the company's fundamentals, buying opportunities would still arise. Even though Tesla stock closed at approximately $113 per share in the first week of January, dropping even more the following day and opening with a sharp 5.7% decline the day after. Newton thinks that this could be a buying opportunity, as he discussed in his appearance on CNBC in early January. When Tesla stock gets down near $100 by the end of the month, there will be some things that will line up that suggest the stock is a trading buy, and it could have a very Mark Newton, managing director of Fund Strat and market technician, told Yahoo Finance Law a few days after the aforementioned CNBC interview, I believe. Now that Tesla has officially reached its oversold territory, I'm aiming to sell it close to 100 before Tesla reports its earnings at the end of the month. At that point, many of my own cycles begin to indicate that there may be a bottom and we might start to charge ahead of spring. Newton also noted that the stock has significantly increased by 10 so far in 2023 after shares of the electric vehicle manufacturer plummeted by 65 in the previous year. Analysts are certain that a number of causes contribute to the startling decline in Tesla's once invincible stock price. First, as Elon Musk concentrates on the newest business in his portfolio, the possibility of operational errors at Tesla has increased. Twitter, second, there are still concerns about manufacturing problems and the rate at which Tesla is selling its products in China, given the uncertainty surrounding COVID-19 policies. Lastly, the competition in the EV market in the United States has only gotten stronger this year, increasing the possibility that Tesla's growth will slow down in 2023 and beyond. Despite these persistent concerns, the general public is starting to show more interest in Tesla stocks than fund managers do. We believe the Q4 setup is getting better. Newton, in a recent note to clients, Citi analyst at Michele stated that the latest sell-off was motivated by real unfavorable fact. We believe that core results alone are unlikely to address December China's demands for market share and other issues, but we also believe that the declining mood is a reflection of the lack of clarity surrounding important future developments. 2023, gross margin on vehicles, price to cost delivery manufacturing, comparison outlook software cadence for newer updated cars, the Q4 results, and the investor day on March 1st might all offer much needed clarity and guidance on these subjects, and that alone might be able to temporarily improve sentiment. Many businesses are also shifting their opinions about Tesla. In the first week of January, Edward Jones upgraded its hold rating on Tesla shares to buy. We think that Tesla's upcoming product announcements will enable it to capitalize on this growing, according to market analyst Jeff Window's memo to investors. Tesla's share price does not accurately reflect its prospects for long-term growth. The analyst stated while worries about slowing economic growth and Elon Musk's time spent managing Twitter contributed to a significant decline in Tesla's stock prices over the past year, we believe that the market for electric vehicles will continue to grow due to global regulations. Global mileage and emissions rules are fueling the expansion of EVs. And while competition heats up, we anticipate Tesla to maintain a dominant position in the global market. Musk's experts think that although Tesla has a strong management team that can carry out the company's existing operational programs, Musk leaving Twitter would be advantageous for Tesla. New goods and technologies should also increase profitability. They contend that software-based or subscription-based programs like fully autonomous driving are particularly crucial for Tesla since they are anticipated to yield higher profits. In addition, Tesla is attempting to lower costs and increase manufacturing efficiency. particularly through continuous battery design advancements that should lower costs and boost profitability. The analyst continued, in our view, the share price of Tesla does not reflect its long-term growth opportunities in response to Dayo's statement that they believe Tesla would be able to capitalize on the growing market with the introduction of new products, due in part to changes in investor perceptions of the company's future, which is dependent on the expansion of the EV market. Tesla has experienced above average price movement both up and down in comparison to the market. In a statement to clients, Tesla highlighted the success of new business endeavors and the company's continued large market position in EVs. When Window mentioned that Tesla intends to introduce new products this year, such as the upcoming Cybertruck and the possible release of an updated Model 3 design later in the year, he also said that he expects Tesla's full self-driving FSD to continue improving along with the automakers have batteries. Window also described Tesla's stock as looking affordable given the potential for the company's long-term growth. Although the stock change this year has been striking, Window acknowledges that Tesla is still the leader in the EV sector and that investor opinion ultimately determines whether new business endeavors succeed. Significant changes in investor sentiment have resulted in above average price movement for Tesla, both up and down compared to the market, according to Fundstrat. Mark Newton, a global stock strategist, investors cannot place bets on Tesla's stock to rise in the foreseeable future because it is plainly broken down. In a recent interview with CNBC, Newton stated that in order for short-term investors to believe that a significant rally will begin, the market must rise nearly above the area where it was broken, which was approximately $206 per share in November. Regaining those levels would require nearly doubling the current stock price. Newton cautioned that investors simply can't proceed in that manner. This comes amid a dismal quarter for Tesla, during which the company stock fell 60% in less than 4 months and erased $700 billion from its market value. The electric vehicle manufacturer also missed its earnings projections, target in the third quarter, and missed delivery and production goals. But Elon Musk, the CEO of Tesla, partially offset the loss by selling his company's shares to pay for the $44 billion acquisition. Investors in Tesla are extremely uneasy about Musk's Twitter business. Some are calling for Musk to leave the social media company as he comes under increasing fire for his political tweets and memes and leadership style. The company is currently seeing its most violent sell-off since coming public in 2010. Musk has promised to re-sign as Twitter's CEO after selecting a qualified successor, which experts say could be positive for Tesla's shares, but unlikely to result in a significant increase in the near future. The biggest failure on Wall Street is that it's immediately right to buy dips on something that's down 50. If 2022 has taught us anything, it's that it doesn't always work well in a bear market. Newton added that there could be a very steep rise, but I think it's too early to be thinking about that level at this point. The stock had only started calling 2 months ago, indicating that the fundamentals were still weak. Newton stated that although there is still a short-term downside, investors may have a buying opportunity when Tesla reports its fourth quarter profits at the end of the month. He went on to say that there might be opportunity for 30 to 50% recovery if the price dropped by 10 through January. Watch this channel to learn more.